afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And as we start the closing trades, numbers for Bajaj Finance coming for you. Largely in line with expectation. The calculated NII has come in at 6,720 crores. Our expectation was close to 6,680 crore. Even in terms of the profitability, a bit of a beat coming in. The actual number is 3,437 as compared to our expectation of 3,300. A lot of the other internals, we already knew that the AUM is up 32% year on year, but the number of new loans added has also come in at 9.94 million, which is a growth of around 34%. Remember, the company had a guidance that they will be doing acquisition of almost 11 to 12 million customers. That seems to be happening on track. And overall, it seems like the company has reported good set of numbers. There's an improvement in asset quality as well. The gross NPA ratio has come in at 0.87 as compared to 1.25%, which was there last year. And similarly for net NPA, an improvement of 20 basis points on a year-on-year, which is the company has reported 0.31% with respect to net NPA as compared to 0.51. So goes out as a thumbs up, and that's the kind of reaction you are seeing on the stock price as well. Holding out with a gain of around 1.5%. And it's been an okay day. We haven't got a bad number yet. Shree Cement was also largely in line, boosted by that one-time income that we had seen in terms of other income. So overall, a decent day coming in for the markets.
Oh, yeah, absolutely. The index as well holding out. Firstly, Bajaj Finance reacting quite positively to its numbers, while much of it was already known in the first quarter updates. But still going by that, the numbers on the PAT front are slightly above what the street was penciling in, while overall it's an inline set. Both the inline as well as the margins stand in line with what the market was anticipating. So a spike of about 1.5%. From there it settles by about a 1% gain. That's that on Bajaj Finance. But lots really buzzing in the market. And mind you, it's not just the index, but the broader market as well, which is pretty active today. So Piramal Enterprises, Balkrishna Industries, Tata Communications, Indiabulls Housing, RBL Bank. There are quite a few buzzers out there. We will, of course, get in Vamakshi as well and give us a detailed analysis on Bajaj Finance's numbers, which are largely in line, no negative surprises whatsoever. In fact, the PAT is marginally higher. Are we getting any more details on that? The car stands at about 24.6%. We have the gross NPAs and the net NPAs standing at about 0.87%, like Anisha pointed out just a short while back. On the gross NPAs, the net NPAs at 0.3%, and that's definitely a marginal improvement from what they reported on a year-on-year basis. The AUM growth, of course, was already penciled in as part of the Q1 updates. The loan losses, the provisions, they stand at about 995 crore rupees as against the 755 odd crore rupees that they clocked in the same quarter last year. So, yep, inline set. If we can take it across to Gaurang Shah as well, get in a quick comment from him. Okay, we will get to him in just a short while from now. But Kunal, a word on the index in fine fettle, irrespective of all the news flow that we had to absorb and all the earnings flow, we're still standing tall.
Yeah, I think standing tall, we've broken that chain of lower highs and lower lows. We've broken that chain of consolidation for the Nifty. The Bank Nifty's emerged quite well, surprisingly. Today, 200 points, 250 points out so far. But I think the way in which the PSU banking stocks, larger cap private sector banking stocks making a comeback for themselves, I think is also quite interesting to see as a pattern. And most importantly, we are seeing a lot of follow through, new stocks emerging as breakout candidates, for themselves in terms of breaking out of their major year consolidations or a multi-year downtrend. So that's also an encouraging sign, which means that the market at every corrective phase is getting a lot more vibrant, a lot more broad-based. It's not dependent on too much of individual leaders from an entire sector, like what we saw for metal stocks in the last 1 or 2 months. Initially, we saw JSW Steel outperforming. In the last couple of days, we saw the likes of Tata Steel, SAIL, etc. They managed to outperform as well as lead the chart. So I think it's a very interesting kind of a market, more broad-based, and indicates that this strong bull trend is here to sustain.
Bull run is here to sustain, and yes, Nifty is comfortably above 19,800. It's Reliance and L&T which is contributing almost 60 points on the upside. So those are the two heavyweights. Reliance on that, of course, the news coming in with respect to the investment in the retail arm by the Qatar Investment Authority, and L&T on account of results and buyback. It's ITC as well, which is managing to perk up quite a bit today. So that's high by 2%, and giving it company from the FMCG space is Britannia. So both of those stocks have moved higher. Midcap index continues to be at record high level. All sectors are trading comfortably in the green. Of course, it's PSU banking names which are rallying hard today, so that's the top performing sector. Tata Motors has been in the news flow and we've been flagging out that Tata Motors continues with, Tata Motors DVR that is, continues to be with a gain of 13% and Tata Motors too has done all right. But of course, all eyes are now on the Fed meeting. The outcome will come later tonight. 25 basis point hike is penciled in. The bigger, thing to watch out for is the commentary and of course the monthly options expiry tomorrow. So that will decide the cue for the market. What is the cue for the market when it comes to the earnings as well? We'll discuss all of that. But first up, Shibani Sarkar Kurian joins us on the show. Shibani, as far as the earnings season right now, the way it has panned out, what's your key takeaway? Do you think it's just the financials which are showing outperformance? Because other than that, there hasn't been a massive re-rating anywhere that we have seen.
Hi, good afternoon. So yes, still early days in the quarterly earnings season. So what we have seen is at a headline Nifty level, numbers have been pretty much in line with estimates. Of course, what we are also seeing across companies is that margin expansion is now playing out with input costs coming off. And as you rightly pointed out, most of the earnings that have come are largely financials and the IT sector. So IT sector, we have seen a muted set of numbers, but that was again more or less in line with estimates. For financials, I think the numbers and the overall earnings trend continues to be fairly robust. While there was expectation of margin decline from the peak that we saw in the last quarter, which is the fourth quarter of FY23, margin decline has not been as stark or as sharp as what was initially feared, and overall margins have been holding up. More importantly, credit growth has been strong, which means that is supporting core earnings. And asset quality trends continue to remain fairly stable and benign, which is also supporting earnings. So I think as of now, the earnings season has been panning out pretty much in line with estimates. Financials continue to show fairly strong numbers, especially some of the private sector banks which have reported numbers so far. Overall, pretty much a good set of numbers.
Okay, in fact, some more details out in Bajaj Finance. It seems that the asset quality is at the healthiest point in this quarter. Let me quickly take it across to Vamakshi. While the stock has completely given up all of its gains, Vamakshi, is there any negative surprise or the street had already penciled in on all the positives?
Well, yes, a strong result was expected from Bajaj Finance and that has indeed played out. So all in all, the overall results look like that it has come in line with what the street was expecting. Now let's first look at the net interest number that has come in at 6,719 odd crores. We were expecting 6,676 odd crores. Now definitely this is more or less in line with what we were expecting, and keep in mind that the AUM growth that the company had posted for the quarter was around 32% on a year-on-year, and an expectation was that the NII growth was expected to lag the AUM growth of nearly 32%, and that has indeed played out for Bajaj Finance. We also expected improving cost efficiencies, and that has indeed turned out. PPOP, that is pre-provisioning operating profit, has come in at 5,544 odd crores. We were working with estimates of around 5,426 odd crores. So again, an inline PPOP is what Bajaj Finance has reported. Other than that, when we look at the provisions, provisions are slightly higher than what we were expecting. We were working with an estimate of around 929 odd crores, but the provisions have gone higher by almost 995 crores is what the provisions are at. Other than that, when we look at the net profit, we were expecting a very strong double-digit growth in the net profit as well. It was expected to come in at around 3,300 odd crores, but the company has actually gone ahead and reported a net profit of 3,437 odd crores, and that is in fact slightly above or rather in line with our estimates. Other than that, when you look at the asset quality, we're seeing a marked improvement out there. When we talk about the GNPA, it stands at 0.87%, and that is in fact the lowest level that Bajaj Finance has reported. NNPA stands at 0.31%, and improvement is what we're noting out here as well. So all in all, it does look like a good set of numbers, but again, it is in line with what the street was largely expecting.
That's the reason we are seeing profit booking on this one as well. Has been the texture throughout the earnings season, whether it was the case of Kotak or the other names as well. Profit booking is what we have seen for Bajaj Finance. Again, we can't point out a miss in the numbers, largely in line, but probably it's the positioning which is making that stock come under a bit of pressure. Just quickly wanted to highlight the earnings coming in for BPCL as well. Looks like a sizable beat on the bottom line, but remember there are usually a lot of one-offs when it comes to the oil marketing company. So let's wait to get more details before we digest those numbers. The profitability has come in at 10,550 crores. Our expectation was around 8,700 crore thereabouts. So almost a 2,000 to 1,500 crore beat coming in on the profits. But the stock is taking its time to digest those numbers, are not flying away because they're waiting for the more details to come by. But Naresh, just quickly wanted your view about Bajaj Finance as well as BPCL.
So Bajaj Finance is getting back into that same zone of problem. 8,000 was the problem zone. It spiked up a couple of weeks back, and now again trying to come back towards those levels is going to be a problem. So what we are seeing is it should take a pause around 7,400, spend some time at 7,400 to 7,800. Till the time it holds above 7,400, the trend remains positive. So closer to 7,400 is a short-term support which I would look at. BPCL on the other hand is an interesting chart because the stock is coming back closer to almost the highs it made in March of last year. And that is a big resistance zone around 400. If it can sustain above 400, that would be a sharp breakout. Could rally up higher. 380 is a support where one could be looking to buy on dips.
Right, okay, that's the take coming in on some of the active buzzers in trade. Let's look at what's happening with L&T. That's one of the biggest movers today. It's still holding on to its morning gains, 3.6% higher. ITC, Britannia, and then there is Reliance Industries as well, which is looking smart indeed. Just wanted to get your sense in Shibani on, L&T and the entire cap goods space, because one part of the market does believe that some of these stocks are richly valued, and then you have a performance like you did from L&T. Fabulous numbers. The order inflow looks very strong, order book position that is. And then, of course, the buyback, the first of its kind.
Positive on the entire capital goods space. And while you are right that in pockets, valuations are looking a little stretched or expensive. However, we believe that the overall trajectory of growth, especially given the kind of order flow momentum that we have seen, continues to remain strong. What we also believe is that there is likelihood of very steady growth where the overall industrial pack is concerned. Of course, supported initially, as we have seen so far, by public capex, and incrementally we do believe that private sector capex is also likely to kick in, which is what is supporting the kind of growth expectations that we have within the space. So the entire pack of manufacturing, capital goods and infrastructure is a segment within the overall domestic basket where we believe that the kind of growth momentum should continue. The second aspect is margins. Incrementally, we believe that margins should also start to improve with input cost pressures coming off, and therefore the earnings trajectory should also be fairly healthy. We are mindful of valuations within the space, so therefore we are looking at opportunity sets within the industrials capital goods space where valuations are still reasonable, but the earnings trajectory remains strong.
Hang in there. We'll just come right back to you, but after this very short break. Back with closing trades right here on ET now. Bajaj Finance, of course, has completely cooled off. It's really been the case of buy on rumor, sell on news, and it's been an inline set of numbers, and you're seeing the stock actually crack quite hard now. We're down about 1.5%, and actually more than that for Bajaj Finance. So that's going to definitely weigh in on the index as it is. The index too has cooled off a little bit from the top of the day. Still going good though by about 0.5% or so. Praj Industries, optically the numbers look quite good. That is what was anticipated. The margins, of course, have expanded quite a bit at 10.25% on a consolidated basis. Year on year, and you can see top line though is a little bit flattish, but the profit performance has seen a bit of a jump. We will be chatting with the management tomorrow and getting a better sense of which way directionally things are headed for them. But let's move on, and India VIX, that's near a record low. Let me take it back to Kunal and find out what he's observing on these charts. Kunal?
Thank you, Aisha, for that. So India VIX is a very important indicator because it's a classic gauge of fear or sentiment across the street across the markets. And we look at the historical charts for India VIX, and there's a classical correlation which we've managed to find with respect to the previous historical times when the India VIX was at 10.5 or lower levels. Now, this is the last 7 years of charts for India VIX. Twice is where the India VIX had managed to come back to that zone of 10.5 or lower. Now, first one was in 2017 and the previous one was in 2019 December, where the India VIX was at a low or had hit a major low for itself. And the recently was what we hit yesterday when the India VIX came back at a multi-year low in terms of closing on daily charts. Now, what are the implications and what does it infer? So we go back to the two previous attempts in which the India VIX had managed to make a multi-year low, and what transpired at that point of time or from those point of time. Now, this is 2023. What matters over here is the approach in or the manner in which India VIX enters into the deep corrective territories. For example, over here, India VIX or the Nifty started off the rally from the March end series, and the India VIX was almost at 13.5 to 14, and we gradually moved towards the zone of 10.2, 10.25, where we closed yesterday. So this word is very important. It's a gradual cool off for the India VIX that has resulted into a gradual and a sustainable uptrend for the index. Now we go back towards 2019 December when the move started off for the Nifty. The drop in the India VIX was a lot more sharp, and from 15 levels, 15.5 odd levels, India VIX had dropped down to 10.5 in just a matter of 1.5 odd month. That resulted into the VIX coming back as an optimistic zone, and we managed to make a major top in 2019 December, and we all know what happened in 2020 from thereafter. 2017, which is almost like a like-to-like comparison of the current scenario for our markets. As you can see that the India VIX dropped from 14.5 levels, and in a matter of 5 to 6 months, we remained in this band of 10 to 11 for India VIX, and this propelled the bull market. And as you can see that the index made up a consistent pattern of higher highs and higher lows. So what we are trying to indicate is that the current scenario for India VIX is very similar to 2017, where we've gone through a very gradual kind of a correction in India VIX, and that could result into this rally in the index getting a further leg up and hopefully going itself into a multi-year bull market from current levels.
Okay, interesting. That's the bit on India VIX at very subdued levels, but what is not really subdued is a lot of stocks. So let's quickly point out some of them. Sobha Limited is the stock I wanted to highlight. Entire real estate pack is quite active, but Sobha is up almost 9 to 10%. Piramal Enterprises is the other one which is getting that buyback support as well. The street is penciling in there could be a buyback at a premium of 25% to the current market price. So that stock has inched higher by around 10%. You also have Amber Enterprises. It wasn't a great set of numbers at all for Amber Enterprises. In fact, the numbers were a bit weak. But nonetheless, the commentary perhaps is something which has been liked by the street, because that's the reason that stock is higher by around 7%. Quickly, if we can pull up RBL Bank as well, that too is perking up. And on the losing side, pull up a Deepak Fertilizers, because that's completely nosedived as we speak. A vertical fall coming in for Deepak Fertilizers, the stock tanking as much as 7%, and the reason is the result, where on a sequential basis, the profitability is down 56%, the revenue has come off sharply, and that's the reason the stock price itself of Deepak Fertilizers is off by 7%. But the stock which is doing quite well in the trading session, not only today but yesterday as well. In fact, yesterday it was locked in upper circuit. Today it's higher by 10%, is Jyoti Labs. Of course, on a consistent basis, we have seen an improvement in earnings, but the commentary is also something which the street has liked, and that's why the brokerages have given a thumbs up. For the details, let's go across to Winnie.
Absolutely, a big thumbs up is coming in from brokerages, and when you listen to the con call highlights, that's the main highlight that has come in terms of the business outlook of the management. They said that right now they saw strong growth. Overall, this quarter was a strong performance that they saw, but going forward, also in terms of revenue growth, they're expecting the strong performance, strong growth to continue. They said that they will be focusing on expanding, and especially in rural areas as well. Distribution expansion channels, the program over there, that is what they're focusing on as well. And in terms of management is expecting the operating margins to come in the range of around 15 to 16% for FY24, which is with an upward bias as well. So possibility of higher than that, but as of now, the guidance that they're giving for FY24 is 15 to 16%. Overall, they believe in the medium term also this margin profile is going to be improving going forward, and they expect the ad spends to remain in the 7 to 8% range. Overall, the fabric care segment, that's seen a strong growth. Increased acceptance is coming for the Henko liquid as well. Mid detergent and brands also have seen a good result in terms of the demand trends over there, what they're seeing. So they've seen a good demand trend driving their sales also for the fabric business, dishwashing category. Strong growth this time around of 10% as well. They're pushing in terms of the lower priced units as well, well in rural areas, which is giving a higher offtake for this segment as well. So overall, they've seen a strong performance. They're expecting this performance to continue in terms of growth momentum going forward as well. Positive commentary and positive views coming in from brokerages is keeping the stock abuzz as well.
Vinny, two of the FMCG names as well, both Tata Consumers as well as Nestle. You track them both. Tell me, what can we expect?
So quickly, Tata Consumers, in terms of what we're expecting from the numbers today, we're expecting a decent set of numbers coming in, especially the Indian food business of the category and the segment for Tata Consumers, that expected to see a 20+% growth. In terms of the Indian beverage business, that could be a mid-single digit growth is what we could expect. Nourishco and Tata Starbucks, especially that comes in the beverage side, that is expected to see a growth momentum, and that strong growth momentum maybe could continue in that segment. Now, in terms of margins, we're expecting a slight expansion, a 60 basis point expansion on a year-on-year basis, and that is mainly obviously the ad spends are expected to be lower. Efficiencies as well as the better mix is something that is supporting the margins of the company. So keep an eye out in terms of commentary, in terms of demand environment. What is the inflationary pressures currently coming in on tea and coffee prices? That is a key monitorable in terms of commentary, as well as the international business update is something that we are keeping an eye out on. Now, from Nestle, obviously what we're seeing is that we're expecting a growth of around 17% coming in from the company in terms of revenue. Volume growth expected at around 7%. So this time around also it seems like it's more of a pricing-led growth than a volume-led growth in this quarter as well. Margins expected to see an expansion as well. So keeping an eye out on the margin number over there as well. Rural is expected to do well for the company. They've been focusing on expanding more in the rural areas. They have made the distribution channels there as well. So that will be something that will support the growth of the company. Operating leverage is something, as well as the better mix is supporting the margins of the company. Factors to watch out for: milk and nutrition business, how is that doing? The inflationary concerns, what is that factor coming into play now? Pipeline of new product launches, as well as rural strategy expansion and demand trends for packaged food are key highlights to watch out for.
Okay, Vinny, thanks for highlighting what to expect for Nestle as well as Tata Consumer. But Shibani, what's your take regarding the entire FMCG pack today? Britannia and ITC are quite excited. Do you think it merits a fresh look?
Yes, so FMCG is something that, incrementally we have been evaluating. A couple of things here. One is, if you look at the data that is coming out from the rural side in terms of real rural wages, rural wages have moved into positive territory, and therefore that bodes well from a demand perspective as far as rural is concerned. Also, commentary from various companies and managements which we have heard so far seems to suggest that the worst is over in terms of the rural demand, and incrementally, slowly but steadily, rural demand should start to pick up, and that's something that bodes well for the entire FMCG pack. The second factor that we've already seen in some of the numbers that have come out is that incrementally margins should start to improve with input cost pressures coming off. Of course, some of that margin improvement will be passed on, and also you will see an increase most likely where ad spends and branding, etc. is concerned. So, but by and large, you should start seeing margins improve, which should also flow through in terms of the earnings profile. So what we have seen in the entire consumer pack is that, of course, consumer discretionary spending has been weak and has been slow. But at the margin from the staples pack, the trends seem to suggest that from here on, volume growth should pick up over the next few quarters, as well as the margin trajectory should be on an improving path.
Reliance, that's the other one which has been in focus. It seems that Qatar's sovereign wealth fund is in talks to buy a minority stake in Reliance Retail. The valuation being quoted is about almost, $1 billion. That's how much QIA is looking to put into Reliance for Reliance Retail stake. Kunal, this stock has really been all over the place, right? First, the pressure in anticipation of the numbers, then the fall after the numbers, and then now again a recovery coming in. Where do you see Reliance headed?
So I think what this could probably do is that the 2500 mark could stabilize, could act as a good support for Reliance Industries. So I look at it this way, that over the last 1 month, I think the entire July series, the stock saw massive short unwinding on the back of course, the demerger. First, and it moved up some 250 odd points, I think from 25, 50, 60 levels towards 2800, 2820 odd mark, where the stock hit just pre the demerger. And I think post that, the stock settles into a trading range for 2500, now becomes a good support for the stock price. the last 2 days of price action, even though the stock or the news for the stock was a bit more negative, but then it's managed to arrest the fall closer to that level. It's also trading above the long-term averages. And this being the expiry week also could probably play a positive effect if you see such kind of a price move for Reliance Industries, because such kind of round figure mark, strong psychological mark actually act as a good base where traders can roll over the positions. Maybe some bit of put writing could also have begun for the stock at 2500 mark. So net I would believe 2500 could actually be a good support point in case if there is maybe another dip of say 0.5% or 1% over the next 1 or 2 days. I think that should be taken as a good buying opportunities, keeping 2500 as a good pivot support or an entry point.
Okay, that's the take coming in on Reliance Industries, but pull up the intraday chart of Bajaj Finance because that continues to reel under quite a bit of pressure. Again, as we said, there's nothing too negative about the numbers as such, but the fact that the stock had run up is perhaps impacting the positioning of the counter, and that's why we are seeing a slip of almost 4% from the highest point of the trading session, because as far as asset quality is concerned, that's seen an improvement. The growth in terms of the customer acquisition as well as the loan book is also quite strong. The NII has managed to beat expectation and so has profitability. So nothing incrementally very negative as far as Bajaj Finance numbers are concerned, at least at the first look. But the stock is seeing a bit of a sell-off as far as Bajaj Finance is concerned. But of course, we have lots of other things to really watch out for. Quickly wanted your take, Nuresh, about some of these real estate companies, Sobha, even the other names for that matter, DLF, etc. And then Piramal Enterprises. Of course, it's a one-day move on account of buyback, but structurally, would you buy the stock?
So Sobha looks the most interesting name out here because the stock saw a sharp cut back in March. It went from 600 levels all the way to 450 really fast. And now we've started sustaining about 600 to 630, which is the resistance for the last few months. So a great trend here in the short term, a good breakout, and it has corrected from 1000 odd levels on the higher end. So looks promising, could go towards 700, 750 levels in the short term. Piramal Enterprises is a stock which has finally started trending after being in a downtrend ever since it got listed after the demerger. Out here, it has started making higher tops and higher bottoms. The recent highs of 920, 950, 920 odd level was a major resistance. Post that, it has become a slow and steady uptrend. It's just that after today's move, the risk reward is not great, but it's still a hold. Any dips back to 1030 to 1050 would be a buying opportunity.
Sure, that's the take coming in right now on some of those buzzing stocks. But Shivani, great to have you on the show. We'll let you go on that note. Good to speak with you as always. Let's take stock of where else are the big buzzers in trade. There's RBL Bank. Idea has perked up 6.5%. There's Balkrishna Industries as well, which is now higher by about 5%, but no relenting really for Canfin Homes. That's sharply lower, a good 9% as we speak right now. Commentary coming in from Bajaj Finance as well. We'll just highlight that in just a second from now. But let me take some closing trades as well on that note. Kunal?
So GAIL is the stock which I would look to trade at current levels. 115.16 is where it's trading right now on the spot. Looks to be attractive. The stock has come out of a flag pattern breakout, so that makes the trade a lot more better for GAIL this time around as compared to the previous times.
Right. Naresh, your closing ideas?
So that would be a buy on Imami Limited. The stock has given a short-term breakout of the last few weeks as well as the last almost 6 months. Good volumes also today. So expecting a move towards 460, 480 in the short term.
Okay, so that's the take coming in on the closing trades. Quickly taking stock of whether there's a bit of a recovery in Bajaj Finance stock or not, because the commentary about the AUM growth of around 29 to 30% should be largely in line. In fact, they're confident of adding 12 to 13 million new customers, and I think this is an uptick versus 11 to 12 million that they had guided earlier. So it seems like the incremental commentary is actually a bit of positive, and that shows that they're confident about the growth going forward. Bajaj Finance has been a phenomenal business. It's been an HDFC Bank of sorts that has been consistently delivering that 29-30% growth. And going forward as well, they're guiding that 29 to 31% growth is something is achievable in FY24. And the long-term targets of around 27 to 30% is also what they stick by. We'll, look further into what the commentary comes in from Bajaj Finance, but it's time now to step into a very short break. Welcome welcome back. Well, below the mark of 19,800 for the index, but it's PNB which is buzzing around, and that's because the guidance has actually improved by the company in this quarter. They're actually expecting the gross NPA to come in at 6.5% versus 7% expected earlier. The net NPA guidance has also come down to 1% versus 2% earlier, and overall the company believes that they are likely to see a credit growth of 12 to 13% going forward, and all of this augurs well for the company, and we are seeing a bit of a move come in for PNB as well. But quickly, just wanted to highlight what are the big cues lined up for the markets come tomorrow as well. Of course, it's a day of monthly options expiry, so we'll watch out for the cues with respect to that as to how the rollover positioning, etc. works out. But other than that, the later in the night, we'll get the Fed outcome as well. 25 basis point hike is factored in, but what's the commentary going forward is something we'll watch out for. Apart from that, we'll get the US GDP data as well as the ECB rate decision tomorrow, so we are watching out for that. In terms of earnings, apart from Bajaj Finserv, which will just be a holding company number, we'll also get earnings from Nestle. We had Vinny to just tell us about what to expect from there. Motilal Oswal had seen a bit of a spike after they said that the company is looking at some internal restructuring. The decision on it will come tomorrow, so watch out for that. And JK Lakshmi Cement is also going to consider fundraising, so that's some other important thing to catch. To keep on your radar. In terms of the IPO action, the Netweb Technologies stock will list tomorrow. It had seen a bumper subscription. Let's see how the listing really turns out. And of course, for Yatharth Hospital, it's the second day of subscription. It has seen decent amount of traction today itself. Let's see how the traction comes out tomorrow. But for now, it's PNB, which is showing quite a bit of traction as well. Quickly, Naresh, your take on the entire the PSU banking space, and which is the stock you would keep top of the heap?
So the whole PSU Bank segment looks interesting. PNB is interesting for the fact that the stock has done nothing. Say pre-COVID, the stock used to be 65-70, so it's come there. So still the trend looks positive. The top of the pack would be State Bank of India, because that's the one which has underperformed over the last 6 to 12 months. The all-time highs for the stock is at 620 odd. We've tested 620 a couple of days back. 620-25 zone has been tested quite a few times over the last period, also back in November, December and Jan of 22-23. So if this crosses and sustains 620-25, that would be a fresh breakout, and it could go towards 680 to 700. So first would be State Bank of India, then there would be PNB, and then you come down to like Union Bank of India, etc. Many of these names have started strong trends. So it's a choice to be taken, but I would go with SBI and PNB.
SBI and PNB, that's the take coming in from within the PSBs. But Kunal, let's revisit some of the frontline banking names as well from the private lot. HDFC Bank, the fall that Kotak had after its numbers, even though the numbers were a really good set. Axis as well, and then of course ICICI Bank.
So I think ICICI Bank is one of the stronger names out of the three so far on the charts. I think it's just hanging around the 1,000 odd levels, 0.5% away from its previous major highs. The momentum in the last 1 or 2 weeks has been a lot more consistent for ICICI Bank. In fact, there was a point where ICICI Bank was almost at 915-20 levels, and Axis Bank was almost at 975-980. But then from there, Axis Bank has remained stagnant, and ICICI Bank has managed to pick up pace from those 920 odd levels, and now hit that 1,000 plus mark. So which means Axis Bank is the stock in momentum. HDFC Bank, I would still believe that the base is shifting up higher. So the previous month, the stock made a low which was around the 200 DMA, around 1600 mark. This month so far, the stock has made a low which is approximately 1650, 60 odd mark, which is again a base which is shifted high by 3% for HDFC Bank. So hopefully expecting that if the same phenomena continues, then we could be looking at 1700 as a fresh base for HDFC Bank start of the August series. So would be having a bullish stance for HDFC Bank. The risk reward is favorable. Even if you have a positional view, 1600 could be a decent stop loss with which you can continue to hold on to long positions for the stock.
Okay, so that's about the banking names, the private banking names of the lot. But you have numbers flashing for you at the bottom of the screen. The numbers coming in from Cipla. We just have one number right now, but the stock is taking that positively. The profitability has come in much better than expected. The revenues too at around 6,300 crores versus what we were working with respect to 6,000 crores. on the top line. So that number goes down as a bit of a beat. And even in terms of profitability, the company has managed to report a better than expected number. Of course, the internals with respect to the details coming in of various business, various geographies, that is something that will get only in the investor presentation. But for now, we have the initial set coming in. And the initial reaction on the stock is quite positive. In fact, that has now perked up a good 1.5%. Let's see if we have the operational details as well, because overall the revenue is better than expected, profitability is better as well, and for most likelihood the EBITDA margins as well would be better than what the street was expecting.
They are, Anisha. The margins have come in at 23.5%. So definitely better than what the market was anticipating, while the top and the PAT as well as are better according to our scorecard.
Okay, so let's wait by and get more details on this one. But Siddharth, I'm not sure if you have already got a sense on Cipla, but the entire pharmaceutical space and Cipla as a stock, if you have a view.
Yeah, Anisha. So I think if you look at the entire healthcare space after having a weak period, even FY23 was a weak period, we are expecting some improvement from the entire healthcare space with a sales growth of about 14% and PAT growth of about 13%. So that we are already seeing some of the pharma names which have reported numbers are showing improvement on back of improving demand that we are seeing both globally as well as in the domestic market, and and more importantly with realizations now stabilizing, the cost pressures coming down. So that is also positive. The biggest overhang that we see is that the regulatory overhang, which kind of eased off in between, is now again coming back. Some of the pharma names have started getting again observations which kind of could delay or could kind of impact the growth per se. But some of, as I said, overall things are looking better for pharma names. Some of the names have already moved up and valuations are now closer to fair zone. Still, if you look at in terms of the preferred plays, we would like to we prefer some of the global exposed names like Sun Pharma, which has much better product portfolio as well as global as well as domestic footprint, which helps them a diversified business.
Okay, so that's the take coming in as far as the entire pharma sector is concerned. But overall, just wanted to reiterate the numbers coming in for Cipla. There's a beat on the top line, and that operating leverage is flowing at the margin level as well, 23.6% as far as the consolidated margins go. We were working with a number of 22.2% thereabouts, and of course that's the reason the profitability is also higher at around almost 1,000 crore rupees coming in versus 806 crore rupees that we were anticipating earlier. The stock has seen at least a bit of a spike. This is not one of the cases where we are seeing that sell-on news happening. There is at least a bit of reaction coming in, but let's see whether it sustains. And when we get more details with respect to how it really has turned out for the company in terms of the US sales, because they do have niche products there. They were talking about market share gain as well, and it's overall a seasonally strong quarter for the company. For US sale, of course, we are working with a number of around 190 to 197 million thereabouts. Last quarter, this number was around $200 million. But nonetheless, let's see what the company reports. And India business too is expected at around 2,600 odd crores. I think we have Unnati Jadhav joining us on the show from BNP Paribas. Unnati, hi, thank you so much for making time and speaking with us. First up, with respect to your take on the earnings of Cipla, looks like a good beat.
I just heard from you that it's about 1,000 crore kind of PAT. I've still not received any earnings report with me. But based on that, I think it's quite a beat because we were also looking at 860 crore kind of an earnings for the quarter.
Okay, fair enough. And with respect to the prospects going forward, what are the big triggers you're watching out for Cipla? Do you think it's baked into the price, or do you anticipate more upside on this one?
See, we have a hold rating on the stock with a 1,030 kind of a price target. And the major concerns that we had was about albuterol's market share over there in the US, which is quite a big, the respiratory segment is quite a big product group in the US. So if albuterol market share continues to grow well going forward, of course, it's going to be a positive. But the key issues are that some of its key products like Giabraxin and Giadware are held up because of the concerns, US FDA concerns around their two plants. So that is also concern for us as far as the earnings growth potential is concerned. However, we do believe that G-Revlimid and Lanreotide were the key products, could have been the key products which would have led to this kind of an outperformance. Yeah.
While we're still awaiting, Unnati, what the segmental performance is, and we are ourselves penciling in the India business to actually, the sales that is, to grow to about 2,600 odd crore rupees, and that's an uptick on a sequential basis. The management earlier had guided for a 22% EBITDA margin for FY24. You think there is any scope that they could up it?
I believe they should be in a position to come out with this kind of an EBITDA margin numbers because they have headwinds in the form of certain concerns as I just listed out, and also their the R&D costs and the sales and promotional costs are going to continue to be the headwinds. So I do believe that this 22-23% kind of an EBITDA margin can be penciled out for fiscal year 24.
Waiting by, I think India has delivered double-digit growth. At least that's the first number that I'm looking at, because in the overall pie of revenue, India forms around 44%, while North America is around 29%. The R&D spend has come in at around 5.7% or 5.5% of the overall revenue. And just quickly trying to understand what the North America sale is like, because that will be another important factor to watch out for. They are saying it's 13th consecutive quarter of growth coming in for the US business. $222 million seems to be the kind of sales figure that they have managed to achieve in terms of the earnings. Unnati, your first take, if the number is $222 million on North America, it will be a beat, right?
It will be in line for us.
What are you penciling in for India business, you said?
For India business, it will be about 2,607 crores.
I think the number has come at 2,772 crore for India as well. So for the North America, I think from a consensus basis, there seems to be a bit of a beat, and the India sales as well at 2,772 seems to be a beat coming in versus the consensus expectation, while Unnati says it's slightly higher than what they were penciling at around 2,600 odd crores. But overall, if you look at the API business as well, there the revenue is around $17 million, $95 million is coming in from international markets. So overall goes down as a good set of numbers. The pipeline update that they have provided is that there are 3 differentiated products undergoing clinical trials, and they are targeting the filings in FY24 and 25. So overall goes as a good set of numbers coming in from Cipla, the India sales as well as the US sales doing all right. But coming back to what happened earlier in the day, and one of the big numbers that we were watching out for was L&T as well. Siddharth, L&T, of course, if you have a view on that, and Bajaj Finance, could you explain the reason why the stock is seeing a sell-off?
Yeah, Anisha. So I think Bajaj Finance, the results have been more or less in line with expectation, and we are seeing the kind of reaction some of the companies after the results which are in line. So it is like mostly like sell-on news. The numbers that have come out pretty good. Net profit growth of 32%, AUM growth again 32%, net interest income was up 26%. So I think NPAs have also kind of come down. So overall, I think the numbers are in line with our expectations, pretty strong numbers. I think today's reaction is a bit of sell on the news kind of thing, but we have a very positive view on Bajaj Finance given the strong growth trajectory that they have been able to maintain, plus the diversification that they are now doing in the financing business, which should help them scale greater heights. Coming to Larsen, I think Larsen has been pretty good results. The commentary has also come out to be pretty strong in terms of the outlook for especially for the order book that the management is kind of targeting, and that looks like pretty strong commentary in terms of the management's focus towards increasing the overall order book, which could drive growth going forward. Especially in a time environment where we are seeing that the consistently the capex theme is picking up just before the general elections next year. We expect pickup in execution as well for some of the construction names, which should also help companies like Larsen, which is seeing strong momentum in both order book as well as in terms of its execution capabilities, which is leading to strong earnings growth.
Right. In fact, let's just get back to Cipla, and I'm going to quickly take it across to Srishti as well, my colleague, and analyze the numbers in greater detail. Srishti? Well, yes, a great set coming in from Cipla, and that's why we are seeing no stopping for the stock of Cipla, because on all the parameters, the company has delivered a better performance versus the street estimates. And look at the margins. We were expecting the margins to be around 23%. The company has delivered 23.6% on that particular front. Even on the profit figure, that has seen a jump to 998 crores versus the street estimates of 850 to 860 odd crores. So on all the parameters, we are seeing a good numbers versus the street estimates. And not just that, when it comes to the performance of the US as well as India business, there too we are seeing a good jump, because do remember that Q1 is a seasonally strong quarter for Cipla, but this time it was a muted expectation from the US business growth, but sequentially we have seen a good jump on that particular front, surpassed that $200 million mark, and 222 million is what the company has reported for their North America business. India too, the expectation was 2600 odd crores. The company has delivered 2772 crores in the profit of India business, and the company also highlights that in the North America business they are continuously ramping up, and in a couple of products they have increased the market share as well. They are witnessing a good traction in the base business, resulting from the strong demand signals and tapering of the price erosion. So the commentary on the strong demand as well as tapering of the price erosion is something which is taken very positively for Cipla, and that's why we are seeing the stock having a good run up as of now.
Having a good run up, that's what we are seeing for Cipla, but whole host of other numbers also expected. Tech Mahindra being case in point, of course Dr. Reddy's is another number, and then Axis Bank, that too is expected to report a good set of numbers. Siddharth, what's your view within the private banking names? Is Axis something that you like?
Yeah, so if you look at the private banking space, I think some of the numbers that come in, specifically the ICICI Bank results were pretty good, robust loan growth, stable asset quality, and in expected lines, the margins are slightly declining. That is a trend that we are seeing across banking names. We are definitely expecting NIMs to kind of consolidate and marginally come down in the current financial year. So that is the case. Especially if you look at, but the core business growth remains pretty strong. ICICI is the preferred bet within the private banking space, having delivered the strong numbers. Even for Axis, we are expecting a strong number, and we like Axis. But in terms of preference, we would continue to prefer an ICICI Bank over Axis. But we definitely will take a call again post the results today and the commentary.
Okay, we're likely to, we're understanding from our exclusive sources that the GST Council is likely to meet on August 2nd, and what they're going to be taking up for discussion this time is the framework of this very contentious 28% GST on full face value when it comes to gaming. Let me quickly take it across to my colleague Prakash Priyadarshi and find out what he's picking up from his sources on this one. Prakash?
Yes, it's a big development coming in, as we are getting from our sources that the GST Council next meeting is going to happen on August 2nd, primarily on online gaming issue, because and this meeting is going to happen through video conference, and that will be primarily based on deciding the full face value, as to how the full face value would be determined on online gaming. This is the major concern that the industry has raised, and some presentation has also been made before the Finance Ministry. So taking all into consideration, the government has decided to call an emergency meeting of the GST Council on August 2nd, and in that particular meeting, that will be decided as to how face value would be determined, whether it will be on entry level or it will be on every bet. So that is something which is going to be discussed in next meeting. As you are aware that in its last meeting, GST Council has decided 28% GST, that will be uniform GST on full face value in the context of online gaming. But the GST Council was mum when it comes to the point that what would be the structure of face value. So it just said face value, and that is causing confusion in the mind of industry as well. So taking all into consideration, the GST Council next meeting is going to happen on August 2nd, and in that particular meeting it will be decided as to how the face value will be determined. Back to you.
Okay, yes, Prakash, thanks so much for bringing us those details. But last 1 minute left for the trading session. The Delta Corp stock hasn't moved much because, of course, the bigger overhang of 28% still remains. The calculation of it is the thing which the which the committee is likely to ponder over.